Hey, good afternoon, everyone. How y'all doing?
Hey,
Hey,
Flo, how you
Anthony,
doing?
Tanya.
Hello,
Wonderful, wonderful.
ladies.
Hey, gent. And hello, everybody out there. This is your show, The Financial Sense. We're ready. We're hot. We're ready for another topic today that's going to blow you guys away. This is the Financial Show. Let me tell you a little bit about what we do. We're called Financial Sense. We're the newest podcast on the All Things Relevant Media platform. We're excited about you joining in the conversation every Friday at 1 p.m. right here on All Things Relevant Media on Facebook and YouTube. So you got two ways you can get us. I'm Mad Flo. I'm not crazy. I'm just making a difference for life and others. So we also have two other great co-hosts with us today, Tanya Scott Pilcher and Anthony Murray. Those are, they're just absolutely, I love them to death. But I'm going to tell you a little bit about Mad Flo. Please call me Mad Flo, Anthony. When you refer to me, Mad Flo is not crazy, but she was a police officer at one point. She did 25 years on the police force, retired in 2007, have three beautiful daughters, three fantastic granddaughters, well, one grandson, two granddaughters, fantastic husband. And I'm also worked with World Financial Group, also World System Builder. We've been doing that since 2013. Hey, we have a fantastic show for you today. We love educating you, giving you more information. So let's meet our other hosts today, Tanya Scott Future and Anthony Murray. We got it coming for you guys. Go ahead, Tanya.
Hey, good morning or good afternoon, and I'm so excited to be here today. I'm Tanya Scott Pilcher with Get Skills, and what we do is we help people establish a new career in a trillion-dollar industry so that they can live their dreams. Now, through in-depth professional development, training, and coaching, we will make sure that you reach your full potential. In the past 2 weeks, I'm really excited. In the past 2 weeks, we have taken 9 people to their first step of financial freedom. I invite you to reach out and hear more because in Savannah, we are reaching our goals, changing our outcome, and changing our income.
Wow.
Wow.
Wow. Wow. I tell you what, Tanya, that was powerful. I don't know. Am I supposed to say something after that? My name is Anthony Murray. And along with these two powerful women of change, and that's exactly what they're doing. They're bringing change to our community. I am also a game changer. I am a financial educator, financial literacy educator. I teach people how money works. All right. And that's why we're here. All right. We're dealing with financial sins. And guess what? This message about financial sins, before it hits you, it hits us. All right. So it's working both ways. It's like a double-edged sword. All right. It's helping you and it's helping us simultaneously. Well, what's our objective? Our objective here is to help our community. And that community, because of the platform we're on, is not limited to where we live. It's limited to whoever wants to participate and want change. All right. Just like Mad Flo, and y'all heard her say she's not mad, right? Y'all heard. Well, the verdict's still out on that. But these are two great powerful women, and we just finished. Was it last month or is it this month? Celebrating women, and I am so honored to be with these ladies of change and helping to bring change in our community. You know, you're not free until you are financially free.
Absolutely.
Tell you a little bit more about myself. My college major was insurance. It was really a mixture. It was business, finance, and law, but they called it insurance. And so I had a chance to really benefit from that and experience a lot. And I tell you what, I'm loving every moment of it. Let's go back to Flo, or Mad Flo, right? She wants to be called Mad Flo.
Mad Flo.
Mad Flo, like a
Y'all think
Western
I'm
name,
crazy.
Mad Flo.
Hey guys out there, I'm asking y'all a question. What is the most boring topic you ever have to discuss when it comes to your finances? I
I
mean,
can't believe
nobody
you
wants
said
to
that.
discuss this topic. And every time you bring it up, people think, oh, "Don't talk to me about that because I'm gonna die. You're gonna make me die or something." You
What?
know, what we're
Yeah.
going to discuss today is one of the most important decisions that you have to make in lifetime. And tell you the truth, the best time to make a decision like this is when when your children first born, 15 days old, you need to make a decision
Make that decision.
on
Right?
getting life insurance. That's it. Life insurance. We're going to talk about life insurance, the different types of life insurance. And I can tell you one thing for sure. And I can guarantee if anybody was to respond back on this question here, if you was introduced to insurance the very first time, which insurance types were you introduced to? Was it term and whole life? I guarantee anybody that comes right now here on this show right here, I guarantee that's what you was introduced to. But there's more to it than just those two. And we're gonna get you to understand the different types, how they work. We're gonna ask a question. The questions of why, when, how, and when you need to have this done. Okay, so that's the topic today. It's a boring topic, but it needs to be discussed. But we're gonna make it exciting, I think, because of what we got coming forward for you guys.
Life insurance
What do you
is
say?
the last thing that people want to talk about, but it's the first thing that they look for when a person passes away, right?
Especially a loved one. Absolutely.
Absolutely. So, for me, I always have a little story, right? Because it's just one of those things in my family, that people make decisions so late in life. And we've had several people to pass away and not have any life insurance. And the reason that they didn't have it, it wasn't that they didn't prepare, it's because number one, they went on their job, right? And they worked for 30 years on that job, and they had this massive coverage from this good job, and that job they retired from. And the moment that they retired, they thought for sure that they would have life insurance coverage because when they were on the job, when they were employed, their employer offered them a package that had, 3 times, 4 times their salary. And with a plan, thinking that, now I'm retired and I still would have that 3 times, 4 times their salary, they end up with almost zero because they cannot take that policy with them. So families have, pretty much, well, I'll say it this way. You are now 30 years older from when you had that job. And now you may have a little high blood pressure, a little diabetes, and it's much more difficult to get insurance. So have you all had friends and family to do the same thing?
Yeah, you know what? Most people wait until they're older before they buy coverage. And man, that's backwards. It really is. Why? Because premium is based on your age and your health.
Right.
Age and health. All right. So let's say you have good health, but you're 60 years old, you're 50 years old. Your premium's still going to be high because of your age. But now let's say that your health isn't the best, but it's not the worst, and your age is up there. Your premium's going to be higher. They're going to rate you, or they could rate you because of your health issues, right? The one who's taking the risk is not you, it's not me, it's that company. They're taking all the risk. All right. And so
Well,
it's
Anthony,
important.
it's a
Yeah.
question. You said that, if they're 25 or if they're 50, it's going to be higher. Why would it be higher if they're 50 years of age compared to 25? I mean, what reason behind that?
All right. So the older you are, the more of a risk it is, because there's more opportunity for health failure. Your health
And
is,
also because the cost of insurance goes up annually, right?
and
Cost of
the
insurance
cost of
goes up
insurance goes
every
up
year.
annually. All right. So the best time to actually get the insurance is, you said it, Flo, or Mad
When
Flow,
you're healthy
Mad
and when
Flow.
you're younger,
When you're
age
15
15
days
days
old,
old.
fifteen
And
Flo,
a
days
lot of
old.
people don't realize that they can get their child insured at such a young age. They
Yeah.
don't realize that. And that's why a lot of people don't do it. They can, the wealthy do that. That's another wealth
True.
transfer. They get their children insured at such a young age. You know why? Because cost of insurance increases every year. So
Every
just
year.
think, if you get your 15-year-old child a life insurance for, let's say, $300,000, you get that life insurance, 300,000. When that child gets 50 years old, 60 years old, they still have that insurance at the same premium, monthly premium. That
That's
could
right.
be $10 a month. They're still going to be paying the same premium amount
Isn't that
because
amazing?
yeah.
function insurance goes up, but theirs did not.
Mm-hmm.
Flo,
Function insurance is going to increase.
my father advised me to get some insurance when I was young. Okay. So of course, I bought some insurance, and it was like $45 a quarter. I had $100,000 policy. And I was like, yeah, I'm good. I got $100,000 policy. So when someone came around asking me, did I have insurance? I said, yes, I got $100,000 policy. I paid $45 a quarter, and I'm good. I don't need anything. And then something
What
happened.
type?
What happened?
Well, I learned, let me tell you what happened. And then I turned 45. And when I turned 45, somebody sent me something in the mail telling me that I needed to transfer it or do something, and the cost of that baby went up. Or if I would have done something, it would have went up. Or I didn't have anything. And I was like, what happened? What happened? What happened just then? And so I learned that I had a term policy.
Yeah, that temporary stuff.
Same thing happened to me. I did the same thing.
Me
My
too.
first introduction into life insurance was a term policy, and I did not understand. I had 250,000, thought I was doing good. Then when I got married, I covered my husband as well, 250,000. We was doing good. And then when I turned age 54, and I had that insurance for about 20 years, and I turned 54 and I got the same thing that you got, a letter saying that, hey, my insurance agent, we need to discuss your insurance for future insurance. And I said, okay, what needs to happen? He said, we need to just get you another insurance, just re-up your policy again. I said, okay, well, how much is that going to cost? That man told me a price of over $400 a month. I said, what? It was term. And I
It was
figured
term
out how much
policy.
money I paid for 20 years. Now, we're not down in term. Term is good, but you have to understand what you have. And see, I did not understand what I had. So you have to understand, we're not saying term is bad. Term is
No.
good for certain situations. But when I calculated, it only works if I die. So if I died between up to age 54, my family would have definitely benefited. But I put in over $55,000 in my term policy, still living. Now I could have re-upped that, but I couldn't afford it. So I found another type, and that's what we're going to talk to you guys about. Term
Well, see,
is good for certain situations, but you just have to understand when you're sitting down with whoever your agent is, get them to explain it to you, or you do even more. Go out and learn about the different types of life insurance, so you
now
will
you
know.
did, you ladies did something a little different than what I did. I did the worst thing in the world. The worst thing in the world.
We thought that was bad.
Yeah, yeah. So you thought that was bad.
Yeah.
I had coverage, and I was doing good. But then I lost my job. Money got tight, and I'm living off of my savings, and I'm living off of other investments. And so I said, well, you know what? I don't really need this insurance thing. Hello. All right, because I just looked at it as an unnecessary bill.
Oh, wow.
You know, if you looked at it as a bill, you would not have let that go. You looked at it as an unnecessary funds going out of your household. People got bills, they pay their bills.
Well, this was an unnecessary expense, but you know the psychology of it, right?
Yeah.
And so what did I do? I let it go. Man, how stupid. But I was ignorant of it. Now, this is the worst thing. My college major. All right. Now, they didn't explain all these intricate parts of insurance and coverage and the importance of keeping it, you know? And that I found happens with a lot of people. I can't tell you how many people that I've spoken to that looked at insurance as a unnecessary evil. Mm-hmm. And what did they do?
They let it go.
I need to cut some bills. I need to get rid of a few things because my money's not acting right. So instead of turning off that satellite or turning off the cable or not going out to eat so much, what did they do? Well, I can get rid of that insurance.
Right.
Mm-hmm. Right. Guys, let me tell you something about lapsing your policy. I'm gonna give you a tip. This is the best tip you're gonna get. If your policy did lapse, okay, you have something called a grace period, like 25 days after your last payment went in. If you don't pay anything after that 25 days, then it's gonna lapse. But I'm gonna give you a great tip. And this is the best tip I'm gonna ever give you. The companies, if you let your policy lapse, most companies give you an opportunity to let you what you call reinstate that policy within 3 to 5 years. Now, if you call in and you cancel it, that's a different story. Right. You cannot get reinstatement. They will not offer you reinstatement. But if you let it lapse, now the company will allow you to reinstate that policy. You just have to go through a little bit of underwriting and get approval. But it's better to, if something happens, if it lapses, you got a little leeway to get it back. But if you call in, you actually cancel it, you're out. Can never get that policy back. You have to start all over again with a new policy. Okay? Absolutely. So that's a little tip I wanted to give you guys. Hey guys, let's talk about the different types of life insurance. Since they know about term.
No, why don't we really explain term? We told them
let's get into more detail about
term and what it is. So go ahead, Mad Flo.
All right.
Okay, term. Term is a level product. Term is basically gives you increments of term in years. You can have it for 5 years, 10 years, 15, 20, and within the last 10 years, term used to be just to 20 years, but within the last 10 years, term has increased up to 30 years. Some companies offer you up to 30 years of term life coverage. Yeah, and what does term mean? It's a temporary, just renting life insurance. You're just renting it. So after those 5 years, whatever the years are, your payments are going to be level. Your premium is never going to increase. It is level for how many years term you have it. But after that term is over, what happens? Now, whatever year it is, if it was 5 years, every 5 year life insurance was still increasing, but yours was not. But now you have to either redo that, re-up that insurance again. It's going to cost you more. So term is, it is increments. Term has a level payment. The premium never change. Term is good for, someone who's, let's say they're starting a business and you need some life insurance and you can't afford what you want to get, a permanent life insurance. We're going to talk about that. Get term for 20 years. Get up to 20 years. 5 years, something changes where you can now get the type of insurance you want. Then you go ahead and drop the term and but you don't drop it until you're approved for the other. But term.
Let me add something in there real quick. All right, with term or the temporary coverage, a lot of companies now are starting to offer within the first 5 years opportunity to convert that term to a permanent policy.
Right.
All right, and when you have that opportunity, that they're not checking your health again. All right. You don't have to go through the underwriting process of that again. but you have a great opportunity to convert over to something that's permanent. All right. And that carries a lot of weight. So if the first couple of years, hey, look, I need to get my money right, my money's acting funny, I need to get it right, go ahead and get that term and then convert it over. All right. If you need to know which company, we have a lot of companies. There's a lot of companies. All right. I'm part of World Financial Group, World System Builder, myself and Florence. I forgot. Mad Flo.
Mad Flo.
She's not mad. She's
Mad Flo.
She's not mad. She's just upset.
No, I ain't upset. Making a difference, you guys.
She's making a difference, and so term, it's not taboo. When you get insurance on a job, that's exactly what it is.
That's group term.
It's group term. All right. And when you leave, they give you an opportunity to convert it to a whole life policy. All right. And so what you want to do,
Some do, yes.
Some do, yes, some do. So what you want to do is you want to get something outside of your job. All right. So especially today, because too many people, they stay on their job 3 years, then they're at another one. Stay on their job 2 years, then they're at another one. All right. And quote unquote, gaining or garnering experience for their ultimate dream career. So you definitely need something outside of the job. Tanya, what were you getting ready to say?
Well, what I was getting ready to say is that what I learned with the state retirement plan, and because we have so many state employees working as teachers, exactly. And the state of Georgia, is that people that have or retire, they feel as if they're going to take that plan with them. And from my personal experience with my mom, she ended up having, a life insurance policy again from the job, and that policy decreased. So the moment that she retired, it went from, whatever that maximum amount she had down to like half. And then as she got older, it started decreasing and decreasing more and more and more, until we ended up having to look at it like, hey, we can get something else. So she did not know, and we have a lot of people that are retiring, because of COVID. We have a lot of people even taking early retirement at this time. And I want to shout out to my classmates and those of you that are looking at retirement from those employers, that you need to purchase your life insurance outside of the job.
Absolutely.
Now. We are in our late 50s now. We ain't in early 50s anymore. And we really need to begin to we really need to get it in place, that we have got to get our life insurance in place now. Now, we were talking about term insurance, right? And so with our term insurance, when is it right? We need to explain to them, when is it right? When is the best time for them to get a term policy? What suggestions do we have? Mad Flo?
Hey, I'm gonna say this right here. If you're young and you don't have much money to spare towards, important things like this right here, let's say with insurance, if you're 20 years old and you cannot afford to get a whole life policy, because the permanent life insurance is going to be a little bit higher, going to cost a little bit more. But if you're like 20 years of age and you want to get a $500,000 policy on yourself, I'm telling you, take a look into it, because you can probably get a $500,000 policy for about $20 or $25 a month. And you can get it for, 20 years. Like you said, then when things change, you can, of course, convert that if the company allows you to convert, or you can just say, hey, I can get the type of coverage I really need. And then for those who are in business, or you're just starting a family and you can't afford the permanent life insurance, look into getting term. And term comes also with living benefits as well now. So
that's right.
You can get that with term life insurance. You can cover that. But I also want you guys to know something that is not insurance. And Anthony said this here a couple of days ago when we were talking. Was that passing of the hat? Is that insurance?
Yeah. Oh yeah,
Oh,
yeah.
Tax
What is that thing
insurance, that's
called?
not
GoFundMe.
insurance. It's not life insurance.
GoFundMe. That's it.
GoFundMe.
That's it.
GoFundMe. That's not life
GoFundMe.
insurance. You know, you have to take the responsibility of your finances and your family's future. You have to take that responsibility. No one else is responsible for that. You have to take those steps. But term life is a convenient way, and it's very, if you're young, it's going to cost you less. Even when you get older, it'll cost you a little bit less. But
Right.
you have to take some action. You can't just think about it and think about it and be a procrastinator. You have to take action and do something.
Yeah, and let
So
me tell you
that's
one of the
term.
things that I
Now,
ran into last year, especially. I ran into a lot of people who wanted coverage that had some major ailments, major sicknesses going on in their health, and now they
oh
wanted
wow.
some coverage. But listen, when you get sick, when you're really sick, you got major things going on, it might be too late. All
Right.
right. There's companies, we got companies that'll cover just about anybody.
Everything.
All right. 99.9% of the people they'll cover. All right. But then there's that 0.001 that won't get covered. And you
Mhm.
don't want to be that one person. Now, one other thing that I wanted to say is that along with GoFundMe is not life insurance. Along with that,
Thank you.
it's not life insurance. All right.
It
Um,
is not.
is that you want to, the younger you are, the more conscientious of the fact of insurance that you become. You want to make sure, like Tanya was saying, you folks that are in your 50s, your 60s. Let me ask you a question. When's the last time you had a financial checkup?
Yeah.
See, we go to the doctor just about every year
Yep.
to get a checkup.
Mm.
But when's the last
I
time
go to
you
the
had a
dentist every six
financial
months.
checkup? So somebody could look at. I had a client who he died a couple of years ago, and I was trying and trying to. You can't twist anybody's arm, but I was trying. And they called me one day and said, "All right, we want to do this." It was too late. It
Yeah.
was right at the beginning of COVID.
Right.
Mm.
All
Oh,
right,
that's when it was really tough.
1 month later, he was hospitalized, and we're trying to get this
Mm.
thing done. The insurance company told me, "Hey, look, uh, keep submitting, just submit the paperwork, and we'll get him to sign." 1 month later, he was unconscious in the hospital, could not sign. His wife did not have power of attorney. Nothing could be done. He died. When I spoke to his daughter told me they had to come out of pocket and add to the insurance that they bought 15 years ago because they did not
That wasn't
have,
enough.
it wasn't enough. They didn't have a financial checkup. You need to have your policy, your insurances looked at least once a year because everything changes. Look at this COVID mess. All
Yes.
right, now one of you ladies will get ready to say something. I'm sorry, I just had to get that out of my system.
You know, a lot of times you look at insurance as you look at it wrong, and it's really a protection for your family.
That's
We
right.
protect our family, and we get auto insurance, we get homeowners insurance, we get
Uh-huh.
health insurance, and then we think about life insurance so last on the list.
Yeah.
And
Mhm.
nobody has to make you, or shouldn't have to make you, get insurance or life insurance for yourself. It is actually a protection for your family. And
It's
it's
an
one of those
income
topics that you
replacement.
need to have early, because we don't know the day or the hour that we may be gone from this world. And then what happens to your family when you're not here? What happens? How do they survive without you? Okay, so physically they won't be able to survive, but financially, how will they survive without
Mhm.
your income being a part of their life when you're gone? And so it is a responsibility as an adult to take care of your life insurance. And if you have it where you have grandchildren, take care of theirs. Take care of their life insurance policies. Get them in place. Again, just like Mad Flo said, buy it young, 15 days out of the womb. You have get a life insurance policy for those babies, and it's the same cost from there to eternity. Okay, they won't have to pay more when they take over that policy. It will be the same, and it's so important. Now, we've talked a lot about term insurance. So now let's take a look at whole life. Whole life insurance is a little different from term. So you want to go ahead and talk about that, Mad Flo?
Hey, also let them know that term does not grow cash value. So we want you to know that, okay? Term policies do
That's
not
the difference.
Grow cash value, but it is an income replacement. If when you pass away, it could serve as an income replacement for your loved ones. So you're used to having two incomes coming in. One person passes away, they had that life insurance. Guess what? Now that life insurance can serve as an income replacement for your loved ones. Now we talk about whole life. And when we talk about whole life, we talk about your whole life. They're talking about the age 100. It's not level 5 years, 10 years, 15 years, 20 years. They're talking about all the way to age 100. But the companies have changed within the last 15 years. They offer life insurance because we're living longer. They offer all the way up to 121. No, we know we're not going to live 121. But just think, you don't have to worry about if you reach age 100, what will happen with your life insurance. They actually give you the death benefit. Give you that death benefit if you live to up to be 100 years of age, then you have to do what you want to do with it. But if you live over 100, up to 121, now you have continued life insurance. This is with whole life and also other things, correction. Whole life just goes to age 100. There's other types of insurance that goes all the way to 121. So let's talk about whole life, the difference between term and whole. First of all, whole life grows cash value, term does not. So what can you do with that cash value? A couple of things you can do with it. You can borrow against your life insurance policy with the cash value that's within your plan. Now, when you borrow, I want you to know a few tips about borrowing. You can only borrow from whole life. You cannot do something called a cash withdrawal. You can only borrow from whole life. Now, another good thing about whole life insurance is the fact that it is tax-free, just like term is tax-free death benefit. You pass away, your family gets that money tax-free. They do not pay taxes on that money. So what do we mean by that? Get you to understand this right here. Let's say that you got a $200,000 policy, and let's just say that you won $200,000 on a lottery. What's the difference? $200,000 life insurance policy, you pass away, your family will get $200,000 tax-free. That $200,000 lottery that you just won, half of that's going to the government. IRS wants their share. So if you're looking for income replacement that you do not have to worry about your family's money be taken away from you and they need it, think about permanent life insurance. Also, term life does the same. Now, another good thing I want to talk about whole life is this. Goes to age 100, draws that cash value. You can borrow against it if you want, if you need to borrow against it. What other benefits we got about whole life? Tax deferred income, tax deferred, the money that grows within whole life
cash value.
You never pay taxes on it.
Right.
That's right.
You never pay taxes on that money. So that money is growing. It may be growing at 3 to 4% interest, but guess what? That money, you never pay taxes on it. And when you pull it out, because it's a loan, you never pay taxes on it.
Yeah.
Right?
No,
so
very important. Very important. You want to make a note of this. Those of you that have nice, huge amounts of cash value and a whole life policy, if you borrow against that money and you don't pay back the amount that you borrowed upon your demise or transition in life, that amount you borrowed is going to be deducted from the death benefit. So your beneficiary, let's say you have, Flo used an example of 200,000, and let's say you have a cash value of, let's say, 12,000. All right. And you borrow $6,000 of that, and you do not pay that $6,000 back, then what happens? upon your transition, that 6,000 will be deducted from that 200,000, and the beneficiary will get 194,000.
194.
Okay, so keep in mind there's no taxes, but you have to understand the difference. Now, there's some people that would say to you, whole life is a waste of money. Don't get whole life. I beg to differ. They say get term and invest the difference. Hey, if you want to do that, that is your choice. But this is what I caution you on. If you get term, you cancel your whole life, you get term, and you want to invest the difference, 20, 30 years from now, after that term expires, and your health has gone to a position to where you no longer qualify for insurance, and the money you invested, the vehicle you invested in crashes, and now you've lost that money, then what?
Then what?
Then what? So you
And
have to look at all angles and what's going on. And when people say that, by term invest the difference, are you in a financial position? And anytime you get into any investment, you have to think, am I in a financial position to where if I lose that money, I don't have to worry about it. It's gone. So what? I don't care. I don't need it.
Yeah. And none of us.
And you also have to go ahead, Tanya.
I said, and we're not in that position most times, where you are able to invest. And most times at that young of an age, when we even start in this, we don't even know what they're talking about invest in. We're talking about putting $50 or $100 away a month.
Yeah.
And that's not even what they're talking about when they tell you something like that.
That's right.
Or our understanding level is not there, where we really understand what they're saying. So it is good. Again, I'm going back to Flo's example. When that baby comes out and you get that whole life policy for that baby, and then it's $18, $20 that you're paying for a $100,000 policy, then they can have that policy until they are 121 years old at $20, and don't even have to go back and worry about their health and what's going on with their body at that particular time later in life. So it is so very important, just take care of your families, take care of yourself by doing this early in life. I don't know if I'm gonna transition this, because I think one of the beautiful things about having life insurance now is that we mentioned a few minutes ago that they have something called living benefits. And living benefits. I made a presentation at a church, and I was talking to people in reference to, getting insurance and getting their life insurance. And I told them, I said, if you've never heard of accelerated benefits or living benefits in your life insurance plan, that you have an old plan, and there's nothing wrong with that old plan. But living benefits and having that in your plan, where if you have a critical illness or chronic illness and terminal illness, that you can pull money from that life insurance policy while you are living.
Alive. That's
alive.
Right.
And how that would help. And so, again, in my family, my father had 6 bypasses early in his life, like he was in his 50s. And, but he was self-employed. So what did that mean to our family? He stayed in the hospital 21 days. He came out, and all he was thinking about was getting back to work, because he had to be the man of the house, right? And living off of one income at that particular time was not going to be enough for our household. Wow. So he went back out to work. Now, if my dad would have had a policy with living benefits in it as a self-employed individual, then he could have taken, if he had $100,000 policy, he could have taken $80,000 out of that policy, been able to support the family for at least the rest of the year and even into the next year, so that he could have spent time just getting well. And I think that if he would have done that when he had those bypass surgeries, he would be here today. because he just did not allow his body to heal from that type of surgery, you know? And so then as he got older, just other things started happening. And if, again, living benefits would have saved our family financially, and it would have saved his health, and he would still be here today. So I encourage everyone, if you don't have it in your policies, maybe you should pick up a term policy. If you got a whole life old policy, pick up a term policy that has living benefits in them, because 9 times out of 10, and I won't say 9 times out of 10, a lot of people are still diagnosed with cancer. They're diagnosed with a stroke. And those living benefits allow a person to, it'll work kind of like if you don't have long-term care. Because if you do have a stroke and come home, your kids are going to help and take care of you for about 6 weeks. Then after that 6 weeks period, they're going to be looking at, Mama, you ain't well yet. So where are you going to get the money from in order to have someone come in and take care of you? That's right. If you have those living benefits in your life insurance policy, you can at least pull that money out, be able to get someone to come in and take care of you until you get to 100%.
That's right.
And again, once you use those monies, it deducts from the whole life insurance policy down to what you've removed from it. And then you still have life insurance policy, you still have a life insurance policy. The premium goes down. You may only have $20,000 left in it, but it's still enough to bury you, right?
That's right. That's right.
Right. Okay. So another thing I want to say in reference to that. When we're talking about living benefits, let's let them know what we're talking about with living benefits, because we have term that offers living benefits for critical illness, terminal illness. And what is terminal illness? Right. If you was diagnosed with the terminal illness, what happens is the insurance policy will actually accelerate and give you an opportunity to use that death benefit while you're living. So it can be covered with critical, chronic, but we also need to let them know, how do you get, what's the other living benefits that we could utilize, and what type of insurance policy can we utilize these in? I'm not sure if any and everybody out there heard of index universal life policies. Index universal life policies, basically you can have a rider added onto that for long-term care and also critical care. Now, all of the insurance policies these days comes automatically with what's something called terminal illness. That's not a rider you pay for. Terminal illness is added automatically on your life insurance policy. What that does, it accelerates your death benefit, where if you're going to pass away within 12 months, boom, now that money can be used while you're living. So terminal illness, but we need to get them to understand the different types of life insurance, because we talk about living benefits. There's term life with living benefits. There's something called IUL, which is Index Universal Life.
Right.
And there are some whole life policies that are now offering a long-term care with their policy. Right. Not very rare, but there's a very offers that. But when we talk about living benefits, all thing we let you know is you need your money while you're living.
That's right.
If you get to the point you cannot take care of yourself and do 2 of the daily living activities. And what's those daily living activities? If you can't feed yourself, if you can't transfer from the toilet, from the bed, what's the other one? What's the other 3?
You
can't feed yourself.
You can't clothe yourself.
What's the other?
Right. Continence.
You can't clothe yourself.
Right. Continence.
Incontinence. You can't, food.
Right.
And what's the last one? I would mix up the last one.
We may have done them all.
But you can't do 2 of the 5 daily
2 of the 6
activities. 2 of the 6. 5. This is 5.
2 of 5.
No, there's 6.
Okay.
Well, I'm gonna look it up real quick. But anyway, you can't do 2 of them. Let's say you can't feed yourself. Somebody has to come in and have to feed you. And let's say you can't transfer from the bed to the toilet. What you're considered to be in a chronic situation that may not change, and then someone has to come in and take care of you. Like Tanya said, can you rely on your children to take care of you? Being a caregiver is a devastating drooling thing to do.
Yeah.
Taking care of someone that's going to be in a chronic situation. Most people's in a chronic situation is going to be like that for anywhere from 3 to 5 years. Can you imagine having to take care of someone for 3 to 5 years? But we want you guys to realize there's different types of life insurance. Term, whole life, and then there's something called universal life, which is a little different from whole life. And the difference is this: whole life gives you an interest rate where you can actually grow money, cash value on a whole life policy, anywhere to 3 to 4%. You will grow that interest on your policy. But if you borrow from your policy, how much interest you think you're going to pay on a whole life policy? About 8%. So you're going to pay more. And then there's universal life. So universal life came about because of people wanting to not have to, they can get the interest from 4 to 6%. So that's money coming in universal life. They got it. Then there's something called variable universal life. Variable universal life means it's on the market. Your money's going to grow at the market. The cash value within the life insurance policy is going to grow. If the market goes up, you got it. If the market goes down, you lose. And that was something that was very popular until it crashed. The economy crashed. Everybody lost everything. Then something called index universal life. Now I'm going to tell you about index universal life because I really love index universal life policy. Works this way. It's not tied to a market. It's only tied. Ours is tied to 3 indexes. But the thing is this: if you want your money, there's 3 ways your money can go, guys. Your money can go up, your money can go down, or your money can just stay to the side. Now you got 3 ways. Which way you always want your money to go?
Up.
Now, up. You always want to go up. Now what happens? You only got 2 ways left. Your money can go up, or your money can go to the side. Now, 2 ways. Your money go to the side, or your money can go down. Which way you want your money to go now? Only 2 ways: side or down.
Side.
Which way you want to go?
Side.
To the side.
Level. Yeah, you don't want to lose anything.
You don't want to lose nothing.
You don't want to lose any money. The money that you brought within your plane, you're not going to lose it. So you have to
Camellia said up.
Yeah. Educate yourself. There's this book right here. We want to make sure everyone get a copy of this book. It's called Saving Your Future. All the information we share is in this book. This book is $4. So if you want this book, either contact myself, either contact Anthony, and we can get you this book right here. It's $4. All the information we sharing with you about life insurance is in here. The information we shared about wills is in here. Trust. But you have to get the knowledge. You have to understand how life insurance works in order for you to make the best decision for your family. Because you can't make a decision when someone comes into your house, insurance agent comes to your house, and they only introduce you to term life like it happened with me. I was only introduced to term life. That's it. And I thought I had the best thing in the world until 20 years later, I had to get more insurance. So education is the key. You got to know. So the book, $4. If you want the book, either, get in contact with Anthony or get in contact with myself. So we make sure you get this book right here, Saving Your Future. Great information in it. It tells you how life insurance works. And
let me mention this real quick. Let me just go over real quick what we were talking about as far as the six areas and terminal illness, chronic illness. All right, bathing, continence, dressing, eating, toileting, and transferring. If any of those 2 areas, you're not able, and when eating, it's not a situation where I can't eat anything. Just simply means you can't get the fork from the plate to your mouth.
You can't feed yourself. Someone has to do it for you.
Yeah, you can't somebody has to help you. What about getting in and out of the bed? You can't get out by yourself. You need someone to help you, to assist you. All right, assist you. All right, so even though you could do it if you really strain out, but you still need assistance. All right, so this is very important. All right, to understand.
And that, with the number of us living longer, and needing or do not have long-term care or any type of which is again something Medicare doesn't cover. any type of assistance when it comes down to your chronic illnesses after having a stroke or a heart attack or even cancer, needing that assistance. The only other place that you're going to get those funds from, if you don't have again, what I'm bringing in something else, a long-term care policy, is to have those monies coming from a life insurance policy where you're able to pull it out while you're living. And those of us that are still young enough to get those things, did you all have any effects by COVID in some of the plans? Because I remember that last year, a lot of the insurance companies' premiums went up. They cut people off from being able to get living benefits before they turned. If you was after 55, you couldn't even get them. And so you never know what else is coming up because of this pandemic. So I'm going to even stress that you need to get life insurance. If you have survived the pandemic, you need to get life insurance. I was even reading another article in reference to something real crazy, and I'm not going to mention it. Well, you need to even look at getting your life insurance before getting the vaccine. That's going to be important too.
Hello. Thank you.
I don't want to say that, but
yeah, no, very important. Very, very important. I had a client that wanted to buy a car. She said, well, after I get my car, I'll get together with you and get some insurance. I said, what? She was in a car accident. I said, well, what happens if you're in another car accident, but this time you don't make it? Then what?
Right.
He said, don't say that. Don't say that. Don't say that. I said,
life
look.
insurance does the driver's record too. They check your driving record. So if I had a client that was trying to get insurance, and when they did the background check on her, and they did a driver's background check on the driving record, come to find out she had a DUI, and boom, she couldn't get it. Speeding also can be they check that as well. And as far as long-term care, now I want y'all to know something about long-term care. Tanya mentioned something about long-term care. If you get a stroke, have a heart attack or whatever. But you know what? Long-term care is not about when you're going to need it. If you're going to need it, it's going to be when you're going to need it, because we live longer. Old age contributes to long-term care. When as you living longer, your body is going to do just the natural things. It's going to deteriorate, and it's going to get to the point where you're going to need some sort of long-term care. It does not necessarily have to be a stroke. Does not necessarily be a heart attack. Just old age. You get to a point you can't do this. You can't. Your body's just breaking down. So if you live longer, guys, you have to realize you need to get life insurance. There's two ways that you can get long-term care. Long-term care insurance could be a standalone life insurance policy.
Exactly.
Or you can get long-term care added as a rider on certain life insurance plans. So the resources out there, you just have to get it.
Absolutely.
Yeah,
hey, look,
Charlie's asking, how much does long-term care cost? And will you please give the information on how to get the book?
All right, great. So how much does the long-term care cost? And will you please give the information? How much does the long-term care cost? That's based on your age and your health.
Your age and your health.
Your age and your health. Okay. You don't, Camellia said, I don't live in Savannah anymore. Can you? Yeah, we'll mail it anywhere in the United States. All we need is your name, number, your address. The cost is, look, I won't even charge shipping. I want to get this information into your hands because I'm a financial educator. We want to help the public. We want to help people. We want to help our community. We'll do whatever it takes. All right, so we got to wrap this thing up. All right, so just a real quick recap, and you could get our names and numbers.
We're all on Facebook, and you can just instant message us, and we'll make sure that you get it. And we'll be back next week on same time, Friday at 1:00. Talking about this same topic, because even though we said it was boring, hey, we had a good time with it because all of us are professionals in the insurance field. And so this is the topic that we know. This is the topic that we love. This is the topic that's making us the money and changing our lives and our incomes. And we invite you into this area of expertise and career. So
Absolutely.
Again, we ask you to come back and join us on next Friday at 1:00. We will be talking about insurance again.
Absolutely.
There's so many aspects of life insurance, and we only hit on two, which was term and whole life.
Yep.
All right.
Or
So
temporary and permanent.
That's right.
You know, so hey guys, I want to thank you guys so much for being with us today, and we're looking forward to really having you. And like Tanya said, you want our information? It's all on Facebook. Under the All Things Alternative.
All Things Relevant Media.
Excuse me. All Things Relevant Media. I'm sorry. Here we go, right?
Make sure he got some long-term care. Anthony, you got long-term care. You're losing your memory now.
All Things Relevant Media, right? So there's a lot of information out there. A lot of information, you know. And if you're looking for a career, as Tanya brought up, I'm looking for people that's interested in a career change or even doing this on a part-time level, just learning. We also offer free financial literacy workshops online. Free, 7 days a week. All right, that's it for me. Flo, why don't you wrap us up so we can get out of here?
Hey, this is All Things Relevant. So glad you guys was able to join us today. We have a guest today. I think we did a top-notch job not making information on life insurance so boring, but we're looking forward to seeing you guys back again to next Friday, 1 p.m. Tune in early. Make sure you share it with your friends and get the word out there that we're out there at 1:00 on Friday afternoons. You guys have a great day. Loved you so much, and look for our contact information on our Facebook page. Okay,
like us on Facebook, guys. All right, Financial Sense, All Things Relevant Media. Like it on Facebook and invite your friends. God bless you.
God bless.